A support level is only as good as the number of times it has held. Today we read one demand zone across a full cycle. It defends price twice in two completely different ways. The first test quiet, the second violent. And the volume panel proves the same buyers were behind both. The chart opens selling off through lower lows into the origin low. The markdown itself isn't the lesson, it's the setup. A markdown that ends when sellers simply run out of steam makes a weak low. One that ends in a sharp, high-volume flush makes a low where real inventory changed hands. The next phases show which kind this is. The cluster of lows at the bottom defines the demand zone, the green band. A low, a higher low just above it. Then price refusing to push lower, the first sign buyers are absorbing the selling. But for now, it's only a candidate. What separates a real zone from a temporary pause is the volume behind the hold and the structure that follows. Here the volume panel does its first work. The origin low prints on a heavy volume spike. A low on heavy volume is a low where a large transfer happened, panicked sellers exiting into institutional buyers. Two lows can look identical in price, but only the heavy volume one has institutions positioned behind it to defend the level later. This is the accumulation signature. Price rallies off the zone and breaks structure to the upside, the change of character. This confirms the zone produced a genuine reversal, not just a bounce. The sequence matters. Heavy volume hold first, then structural confirmation. Together, they upgrade the zone from candidate to confirmed, a level worth trusting on any future test. From the change of character, a clean markup begins higher, highs and higher, lows through the middle of the chart. The zone is now far below price. But it doesn't stop matching. It's the structural floor of the whole cycle. As long as price holds above it, the bias is up. And if price ever returns, the zone gets tested again, this time as a validated level. The markup runs to a major higher high near the top. Price is now far above the zone, untested for a long stretch. When price is making new highs, the origin zone feels irrelevant, and traders stop watching it. But the buyers who defended it haven't gone anywhere. The zone is dormant, not gone, and the move about to test it will catch most traders by surprise. Price collapses. A sharp, near-vertical markdown drives all the way back to the zone. Not a gentle pullback, a capitulation flush that triggers stop cascades and convinces most traders the trend is over. Structurally, it's the second test of the origin zone, but the character is the opposite of the first. The first was quiet accumulation. This is violent panic. Same zone, opposite character, and that's why most misread it. This is the single most important candle on the chart. The capitulation low prints the largest volume bar on the entire chart, bigger than the markup, bigger than the origin spike. That's the signature of massive institutional absorption, trapped long swallowed whole by buyers defending the zone. A record volume bar that breaks the zone and keeps falling is distribution. One that holds and reverses is absorption. The next candle tells us which. The zone holds. That record volume candle closes well off its lows, a long wick rejecting the capitulation, and the next candles reverse sharply up. The speed of the reversal confirms the record volume was absorption, not distribution. A zone that holds once with a change of character is good. A zone that also holds a violent retest on record volume is a great one, proven twice, under opposite conditions. From his second hold, price launches the cycle's second leg to new highs. The zone has now been defended twice and fueled two legs higher. The two tests, quiet accumulation and violent capitulation, bookend the cycle, and both held because the same institutional buyers were behind the zone both times. 3 things to carry from this chart. A demand zone earns credibility progressively. Read zones as building trust with each test, not as simply valid or invalid. The 2 tests of a strong zone often look opposite, and the violent one is usually the better entry, because the panic hands inventory to institutions at the best prices. And record volume means nothing until you see whether the level held. The volume shows a transfer. The price action shows which side won. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.